prices today, reacting to those comments from Venezuela, the oil minister, saying that producers were coming close to a deal that would potentially stabilise the market. Well, for more on how likely that deal is and what it might mean for the market, let's bring in Peter McGuire, XM.com CEO, who's joining us live in our Sydney CBD studio. Pete, great to see you there. Thanks very much for joining us. Now, just taking a look at those oil prices, they are down today. We've heard from Venezuela saying that the global supply, that needs to fall, by about 10% in order to bring production down to those consumption levels. So of that 94 million barrels that are produced each day, that seems to be a fair bit of supply that actually needs to come out of the market.
Well, good afternoon, Leanne. That's exactly right. And that's it's not a bad time to really put a note like that forward, considering that this time next week they're all in Algeria and they'll be meeting on the sidelines, OPEC and non-OPEC producers, to try and look at how they can, sort the matter out. It really is creating quite a fair bit of tension across the OPEC members. And, of course, some of those big producers like Brazil and so on are really hemorrhaging under the weight of these cheaper oil prices. So that was a message from Venezuela. Let's see what happens, but we should know more by the end of the month.
Speaking of consumption, India, this is an interesting market because their oil and gas consumption seems to be growing pretty rapidly. Millions of households that are buying cars and motorbikes as a status symbol. Although obviously their consumption is pretty low relative to the likes of China, it is still growing at a very fast pace.
Well, exactly right. When you do think of that status symbol, mobility is key, and that's where people are coming up the curve, Leanne. 108 out of, so the numbers are 108 motorcycles for every 1,000 population. Roll your mind across to somewhere like Malaysia and it's about 362 or so per 1,000. So it's got a long way to come up the curve. They're a lot cheaper, but more importantly, gasoline consumption is well up because motorbikes run on gasoline, and year-on-year numbers, I think they're up the best part of 10% or so. So the demand is there. Maybe we should go into motorcycle manufacturing.
All right, now we talk obviously about the volatility that we're seeing in these oil prices, especially ahead of that meeting next week, hopefully being close to sort of coming to some sort of deal. We'll have to wait and see. But from a technical point of view, the technical market indicators, it's looking a bit weak at the moment. Both WTI and Brent, they're close to testing some pretty important support levels.
Well, exactly right. And this is probably why the large ministers or the oil ministers are coming out. They're conscious of that. They're living this. It's a heartbeat for them, and they're realising that, are we going to see a continual sell-off leading into Algeria? They're saying that fourth cycle, as far as the hedge fund, is coming to a tail end and a closing of the liquidation phase. So it's not the start of the fifth, it's more the end of the fourth cycle. We've discussed that again last week, and that's just for the viewers. Hedge funds have been in this cycle. They've had 4 cycles since the start of 2015. So at the present time, if we do see a little bit of a bounce, we've got a busy week on. We've got, of course, Fed and BOJ. So it's a wait-and-see approach, Leanne.
Yeah, absolutely. I'll come back to that, those couple of points in just a moment. And, of course, I want to get to iron ore and gold as well. But just wanted to get a quick thought from my guest hosts here who joined me in studio, Francesco Dostratus from Ord Minnett, Mark Todd, Director of Capital Financing at the NAB. In terms of that deal, potential deal out of OPEC next week, they're saying that they are close to coming to some sort of, finalisation or a deal. What do you think of the chances?
They would say that. I mean, Pete and I have been talking about this for a long time, where I don't actually think Pete, have they ever come out and said we're nowhere near a deal? I mean,
no, Mark.
Like, honestly, no, we were the one. I can't remember where they were, Peter. I think they were somewhere in the States, like Florida or somewhere, and they came out and said we have a deal. Like it was like Chamberlain.
Yes.
we have peace in our time.
Put a man on the moon.
Yeah, and literally the next week they went, okay, hang on. Iran wasn't there.
They always agree on something, but they all go off on their own merry way and do their thing anyway.
Iran wasn't there.
So I don't think...
Producers not there.
I mean, it's nice to make an announcement and that'll affect the market.
Yeah.
But when it comes down to it, they'll all go ahead and produce what they want to produce.
And that's all it is, isn't it? Talking the talk, trying to jawbone, as we talked about.
Oil prices, whilst I think they're starting to stabilise around the $50 a barrel anyway. Peter probably looks at this a lot closer than I would, and I see 6 months ago I was calling oil around the sort of $60 a barrel. It's probably not there yet, but I think it'll stabilise around those levels, and the supply and demand side of things will sort itself out.
Pete, you were talking about a few weeks ago about Saudis rebalancing their accounts in terms of their investment accounts.
Yep.
And that they might be doing an equity raise. What's happening with that? I haven't heard much on that.
No.
Is that still on the cards around these prices? Is there something about taking the pressure out of the oil for the Saudi group?
Well, we're very conscious a couple of things. First off, the Saudis, like any members of the Gulf states, the population is very much employed by government, and you've got foreign workers coming in doing cheaper labour jobs. So in turn, we're trying to get, and they're going through that phase at the moment of seeing what the future holds as far as employability and so on. That's why they're going to raise the best part of about, I think it's close to $2 trillion, 1 or 2% for an IPO. It'll be the largest in history. But yes, it hasn't had a lot of sound at the moment. There's no noise on the street, and it just seems to be in the background at the moment, Mark. So I haven't heard a lot about it. Maybe we're going to see something happen before the Hillary Clinton / Trump circus finally comes to town. But at the present time, I think the jury's out on it.
All right, I wanted to switch to iron ore because one of the commodities that's been this unexpected top performer this year, there is still the view, though, out there, Pete, that prices are going to fall. The question is when, because it still seems like there's no sign that China's appetite for imported iron ore is waning.
Well, exactly right, Leanne. The prices are up 28% or 29% for the first 8 months of the year. They're saying you'll probably see an average $46 to $48 for 17 and 18. Analysts are saying that we're down from the numbers that we saw. Those better. I think in April they were $68 or $69 a tonne. So we're off those sort of numbers. It'll be very interesting what happens over the next, matter of a couple of weeks. And are analysts going to be correct? And are we going to see a little bit of a, pushback as far as price? But I think it's just at this time of year, you've got to say that the numbers coming out of China as far as, consumption is just absolutely monstrous.
Yeah, and Pete, I think that's part of it. If you follow some of the really smart fund managers for Asia, they think it's all about the politics of the second round, the second 5-year stint of the Premier, and that there's just this idea that normally it would be ceremonial, but this is not going to be ceremonial. This is going to be, I need to keep the economy going really strongly. Yeah. So I'm not suggesting it's like Putin, but it's just that what's the legacy look like, and then who is the next leader? And it's part of the reform agenda. They're trying to leave their mark, and I guess they can afford to take some hits around the changing of their economy.
And on the supply side, I've seen some news that some of the really low-grade stuff coming out of the Chinese mines is being shut down. So supply side reaction there as well.
That's exactly right.
Yeah, they would be prepared to let some of these SOEs go to the wall. And that's, what's your thoughts on that? The idea that they'll be able to sustain the economy while at the same time change the economy around, which is the businesses they want to be into. Cement, iron ore doesn't seem to be the two that they'd like to be in at the moment.
No, well, that's right, and and that's why the import is so strong from other corners of the globe. I know Australia's done very well out of it, and of course Brazil. So the appetite, we think it will maintain over the next couple of years. We don't see any pushback, and you're looking at those numbers; they're up about 9% year on year. So it's very, very strong, and certainly prices may come down a little bit. That may be just a bit of toing and froing. It's hard to put a forecasted number where you're going to see prices 18 and 19, but the market's saying 46, 48. It'll just be a little bit of a wait and see. But I think you're right, Mark, as far as, that 5-year plan, they need to see that 6-7 plus GDP number, and that's what they're maintaining.
Francesco, do you have a view, as Pete was saying, a lot of analysts turned sort of cautious, a lot of pessimism creeping back into the market. What are your thoughts on where we'll see iron ore headed?
Oh, look, I think it's gone further than I thought it would have. It's trading around the $60 a tonne. I would have thought sort of 45 to 50 might be sort of fair in the marketplace. But, when you've got that supply side response in China, demand picked up a little bit, as Mark mentioned, with, some of the spending going on in China. I look, it's not unreasonable for where it's trading at the moment. But, the Chinese are renowned for stockpiling too. So they'll go through a phase of buying and buying and buying, and then they'll go, we'll have a rest for a little while. And I think that's what you'll see the iron ore prices start to settle down a bit. And you know, when you've got to look at the tail of all this too. Oil prices are similar. You know, you've had significantly high prices for quite a long period of time, you know, a couple of years, and they've come back significantly. They're always going to bounce off the bottom, and then they're going to overshoot the market a little bit going up as well. So, you know, it's just normal market volatility, I think, coming into play as well.
Okay. All right,
Exactly.
fantastic. Pete, I wanted to get back to you and talk gold prices, because I noted that they did edge up in Asia today. Cautious trading, of course, ahead of the Fed's meeting. The majority of people, obviously, you know, not expecting a rate rise, but a lot of this uncertainty over the Fed's timing of a possible interest rate hike is keeping a lid on those gold prices, it seems.
Well, exactly right. You know, the barometer, from what we look at, of course, is the 2-year. You're seeing that at around about 11 or 12%, you know, chance of a rate rise for September. So that's nearly to the point of washed out. I think it's under 50% now for December. So when we take that on board, there's every chance that gold is going to, unless you see something dramatic happen, and that could be you know, if, it's an unknown yet who is elected in the White House, and I think that's the next issue that could greatly affect as far as gold pricing. So at the wait and see at the moment is certainly, you know, where the US dollar trades. There's nothing out there really pushing it around too much unless you see something dramatic come out of BOJ or the Fed. So, Leanne, at the present time, it's sideways trading.
With the BOJ, do you think they could steal the thunder from the Fed this week, potentially, if they choose to give more monetary stimulus?
Well, they may well do. I mean, we all understand where they are, Arbenomics, and where they're looking at as far as, you know, their growth numbers and what they're trying to achieve as far as inflation. Their hand is certainly on the wheel, and I think it's pretty much a response will be whatever is required to get, you know, Japan kicking along. They've been languishing for a hell of a long time, though. The Nikkei's had a really nice run-up over the last couple of years, but it's off from its peak a little while back. So it's just they're tempered at the moment, but nothing would surprise me with the BOJ.
Pete, the way I think about it, it seems to be we've lost confidence in central banks, that they put their hand up and saying we're probably at the end of what we need to be able to do, or the capacity of what we can do. Is that of greater concern in the commodity market space, where they're saying if you like, the central bank put is now, you know, have to reprice it. The delta has changed. So what's the value of the put when you think you aren't going to have a central bank there to buy it off you? Do you think that's starting to impact a lot of markets?
Well, I think so, Mark, you know, and that falls back, of course, to where the US dollar trades. We're very mindful of, you know, what we've seen there compared to our dollar, of course, Canadian dollar, the New Zealand dollar. All those commodity trading currencies have been hit pretty hard, though the New Zealand's a lot stronger than what it was over, say, a year back. But when you think of where the US dollar is and everything is priced traditionally in US bucks, whilst you've seen a washout along many commodities, it's also been a nice little push up for if you're being paid in US dollars. So it hasn't been all gloom and doom.
All right, Pete, we might actually leave it there. Really appreciate you joining us on the program, though, this afternoon. Thanks very much.